Thank you, everybody, for being here. Wow, that was an exciting Indie Award ceremony. A little bit about myself. This is my sixth Casual Connect and sixth time speaking here, and so a lot of really great insights I want to share with you today about M&A and some of the trends that we're seeing. A little introduction, Quorum Group is a sell-side merger and acquisition firm. We work with technology companies and gaming companies. Been in the business for 30 years, over 300 transactions at this point. So if we get into it, the quickly changing gaming industry, every quarter something new happens, something new is coming up. So it's very exciting to keep track of what is driving some of the trends on the M&A perspective, on the fundraising, who's buying, and where the funds are flowing from and to. So we'll take a look at the Asian market in more detail, as well as some of the trends and a little prediction in the very end. The M&A industry is heavily driven by the public markets. If the public markets are performing well, there's confidence in the economy, there's no surprises. This significantly drives the record M&A activity that we've been seeing over the last 2 years. This is a sample of 12 months of 20 public peer group companies that it really shows the enterprise value to revenue. So we're at 2.3 times in the end of December. And then we have the enterprise value to EBITDA, which is at about 10 times. So taking a look at who the most active technology acquirers are, we have Google at the top of the list. We have some of the new up-and-coming technology companies, if you can call them that, like Twitter and Dropbox. You see significant acquisitions done by the advertising giants. So we have WPP and Publicis with 30+ transactions, really showing the digitalization in the advertising space. Google uses its cash very efficiently, driving a lot of strategy through acquisitions all across the board. We have Yahoo also at the top 3 spot. They were down from last year's 39 transactions, but still very significant. And then we see the companies in green here that are major players doing gaming transactions. Diving into a few of these, Yahoo has done over 30 mobile transactions in the last 2 years. Most significantly, Flurry, very significant deal for them. Marissa Mayer has placed a lot of confidence into the head of Flurry, who has now a much wider span of control over the advertising technology group there. Microsoft, of course, did their Minecraft transaction, which was quite interesting, and at the same time, very insightful and also very forward-thinking. Minecraft, of course, was the #1 selling game around Christmas time, second highest grossing game worldwide. And then we see Amazon's Twitch, which is performing very well under the helm of Amazon. They've hit 100 million unique monthly users. And now they're doing their own acquisitions. So they acquired Good Game. Good Game has been very kind of instrumental in bringing on big name brand advertisers into esports. So they really have those kind of relationships and methodology of exposing the advertising side of things. So let's take a quick look at Oculus. Oculus is an interesting case study where under Facebook's leadership, they've been able to continue growing and building out their roster of very innovative thinkers in the virtual reality space. So right after the acquisition happened, they acquired Carbon Design Group and Jenkins, which is known for RecNet. And then in the middle of December, they pulled in Nimble VR, known for their hand tracking technology, as well as 13th Lab with their 3D model creation. Looking at the general gaming ecosystem, here's some trends that we've been seeing for M&A. This is a data set that my team and I have put together, including companies, game studios, portals, infrastructure players, all of the mixes that need to be there to have a good ecosystem. This is 2009 through 2014, looking at half years. And you really see the green line, which is the activity line, trending up significantly towards the end of the year. The yellow-orange bars are billion-dollar transactions. You've seen those double from the first half to the second half. And the more interesting part of this puzzle for many of us here is the blue line, which are the small and medium-sized companies. And that too has doubled. So that's good news for those of us who aren't unicorns, as Silicon Valley calls the billion-dollar companies, to really have a good position to be talking with the strategic buyers, because they are out there and they are doing these acquisitions. The average deal size has increased about 21% year on year, now standing at about $115 million out of the group of companies that have disclosed transactions. So which companies are contributing to the record year that we've been having? Many of these you will have seen or read about or know. Two of which I want to draw your attention to are a little bit more interesting on this list. So at Quorum, we work with equal parts strategic buyers as well as financial buyers. Financial buyers at this time are very valuation friendly, and they also do deals very quickly. And so you see CVC Capital Partners on here, a London-based firm, spending almost $1 billion on Skybet, which is a significant table stake that they're placing into that company. The other interesting company on here is Churchill Downs, who bought Seattle's Big Fish Games, which, if you don't know the background, the detail, it doesn't necessarily make sense from a high-level perspective, but it's very, very informative and also smart, forward-thinking transaction. The other thing you'll note on here is a lot more blue and white on the flags. So if we look at the Asian composition of these deals, in 2014, they represented 4 of the top 10 deals, down from their highs of 9 out of 10 the year prior, and 2 of which were take-privates. So there certainly is arbitrage between the East and the West. There's also arbitrage going on between private and public companies. The leadership teams of these 3 companies believe that they can significantly improve the companies and help turn them around, become more mobile-focused, without having investor pressure. And if we go back to Yahoo and Marissa Mayer, she certainly has been feeling that pressure to turn around the company very quickly. And these 3 companies are trying to do it the other way around and have time on their side. So acquisitions, the ability to drive inorganic growth, has been a key strategy used by a lot of Asian companies. I'm highlighting the 3 here. This is growth percentages year over year from 2013 to 2014. And it's significantly being used to gain gamers and users outside of their regions. We heard Gameville talking yesterday and how they're starting up their Berlin offices and offices globally. They're also doing it through acquisitions, acquiring very large companies like CompToUs that have added on more players than they originally had on their own. Nexon, number 1 here over the last 2 years, has purchased a stake at Bosky, which is a North Carolina-based company. It's run by Gears of War designer there. And it really is a focus on getting a little bit more outside of their range and their scope, and also increasing their revenues coming out of North America, which currently stand at only 5%. So let's talk a little bit about Tencent. Tencent, world's largest gaming company. They're also the most active VC, if we can call them that, in China. So on average, they do about 3 private placements a month. And it certainly is being exhibited as a full-on kind of cage match between Alibaba and Tencent. They're both very active, doing a lot of acquisitions, and they're starting to encroach on each other's markets and territories. So, can we have 2 such large companies in China without getting a little bit roughed up? Maybe, but they'll start expanding into the rest of the world. And they've been doing that. So since 2013, just these 2 companies alone have done 88 acquisitions and investments worth $21 billion, according to our research. Very significant. Some of the companies that we expect to start doing acquisitions are found on this list. So these are newly minted companies. They've raised $1.5 billion through capital means. And what you see here is there's one Western company, King. They're also the oldest, and they've actually started doing transactions. The rest of these have yet to announce any, but we certainly expect them to do so this year. So all of the activity that we're seeing, some of the more interesting aspects in the technology space that we're also seeing, what does this mean for us in the room? And what should we be thinking about going forward? Where is the market heading? And I wanted to highlight a few trends here. So a couple of years ago, I was working on an ad tech deal and ran into this amazing chart created by Luma Partners, which showed the entire ad tech space and all the relationships that the various parties have to help advertisers get to the end user. Now, if you have time, I would suggest you take a look at their most updated version of this chart, where it has a bunch of black boxes for all the companies that have been since acquired or consolidated. It's a very different landscape. And it's a constant reminder of how quickly this space changes. In fact, if we look at Facebook, which is now becoming one of the most important massive mobile marketing platforms, and we look at Apple adding on more and more tools for their developers to stay with them and maybe not focus on Android as much, it's really being kind of a battle of the largest companies, and they'll likely take home the bacon at the end of the day, because they have the mobile and gaming apps in their crosshairs. So gaming community has been exponentially good at really being driven by data. We have so much data about ARPU, about user acquisition cost, and it's a little bit more rare in the rest of the technology space. And I believe that a lot of these companies will start to recognize that and want to get some of these insights and some of these data gathering methods within their solutions. So we'll start seeing full-on suites from beginning to end, where you don't have to go out to 20 advertising networks to push your product out. There's going to be sophisticated solutions that will be able to manage all of your impressions and your billion impression that you're trying to spend, but through a limited group of partners. We see Yahoo doing this, so they got Flurry, they added on Ad Motivate, and now they're giving us indications that they're actually building out a demand-side platform, and they're going to be testing it with their largest customers. So it's really creating a kind of a technology arm race in this space. If we look at the social real money casino space, the leaders for the social casino space have really been set. This is research provided by Eliers, and if you're looking at it quarter to quarter, it's not changing anymore. The top 4 companies on here have half the market share of this $2.7 billion market, and it's not moving. And some of the things, a couple of years ago where there was so much investment into the social casino space, we see that trailing off, and really it's going to be very difficult for some of the startups to actually get to larger size and come out to be a winner. Not to say that there aren't any such examples. The middle market here is quite active, and again, referring back to the Big Fish deal, it's one of our Quorum's top 10 themes that we have, sports and gaming. And this deal is a perfect example of sports, gaming, and gambling coming together. 2 deals on here, the Big Fish and Dragon Play deal, have some interesting earnout situations attached to them, where either half or more than half the deal is in earnout fees. And that's really a strong indication that the founding team and the members of the board and their management team have a very kind of bullish expectation for the next couple of years, and they've structured the deal as such to be awarded if they go through there. Part of the record year that we had, so in 2014, $33 billion was spent on M&A in gaming, was due to these companies here. So in the span of 3 months, these billion-dollar casino companies consolidated, contributed $13 billion out of that $33 billion. How many companies are left to be acquired today and this year? Not as many, and that's the interesting thing about technology shifting, is the consolidation happens within a very quick period of time. And we saw that a couple of years ago with social marketing firms like Buddy Media. Games as a service is becoming more of a common theme and term that you hear in these conferences, and I'm sure you're thinking about as well, but the idea of delivering compelling gameplay from beginning to end, from the first moment a user becomes aware of your product through the end and keep them coming back, is extremely important. It's no longer okay just to create a great game. You need to have a whole service incorporated around them. And a lot of these things we're learning from the SaaS companies in the enterprise world, where they're providing amazing service capabilities on the back end through companies like Salesforce and others. And we have some of these kinds of specialized companies working with gaming developers. So specifically, if we look at HelpShift, we're working with companies like Supercell to really process all the FAQs and the tickets and all of the various inquiries that users are giving them in an effective manner. We have companies like Mixpanel that do extremely deep mobile data analytics. And then if, for on the very beginning developing side, Photon helps create some of the engine mechanics that you may not want to create on your own or may not have time to. So they'll help you do multiplayer across platforms. So it's really key to think about all of the tools that are available to create successful games, and they're there. Of course, as we're speaking about monetization in the free-to-play space, this is also moving into consoles. So according to SuperData research, there's 2 times more of the market share is found through microtransactions rather than purchasing full games. And it's really also an indication of how many various units there are out there and how many different kinds of models, as well as all those that we've been hearing announcements of. And the interesting thing here is it's becoming more of a consultainment, so it's in the living room. It's no longer just teenage boys, it's the whole family. And it's really expanding the population base of gamers. And it's becoming very clear. So no longer are we just focusing on the data aspects of, the population is very broad. We see it through other means as well. So through the esports theme here, according to YouTube surveys, only 37% of the people watching gaming videos online are gamers. So that's an extremely large population out there. On YouTube, out of the top 10 channels, 6 are gaming. So I'm talking about PewDiePie with 32 million subscribers. And they really come for not just getting tips and tricks about how to pass levels, but they're coming for the entertainment. It's funny, it's humorous, and it appeals to a wide range of people. So to wrap up the tremendous amount of M&A activity that we've been seeing, what are some of the predictions that we have from a very high level? Let's call it a 30,000-foot level. First of all, mobile costs, the increasing costs are not going away, so that really forces us to be very creative and having a viral hit that helps bring games to the top. Fun Run is a great example here. It's one of my favorite games. I played the first version, the second version. And they've done it with 0 marketing spend. It's incredible. Secondly, we're looking at licensed content. So these games are becoming almost, pop icons in their own right. And as such, there's, various toys built and various other applications. If you had a chance to go through Target in the States during the Christmas time, Minecraft was everywhere. It's fantastic. We're predicting more and more different kinds of ways to consume digital content. So season passes or all-you-can-eat options really open up the consumer's appetite for trying new things. So this is good for independent developers and also the less top-of-mind companies to be able to get a chance to be tried by consumers. And then lastly, we talked about this, the general population is so wide. And if we're looking at some particular research where it's been said that women spend 30% more on in-app purchases than men, they are now larger in terms of a population demographic than teenage boys. And then who comes after them in terms of spending? It's kids, according to this research. So it's a very wide variety of gaming players out there for developers to be working and thinking about. So what we see for the rest of the year, I think that M&A will continue to be very strong. There's a lot of strong funding. There's a lot of really great ideas, a lot of consolidation in the industry, and just a meshing of various kinds of companies. You see it from the advertising side, you see it from the entertainment side. So it's going to be a very interesting kind of year, and the ability to talk with these companies and really get a sense of how do you fit into the bigger puzzle? Are you doing the right thing strategically if you're thinking about 2 years, 5 years down the road? or are you very focused on the next couple of months? So it's a great way to experiment and see what you're doing if it's actually capturing the market's attention. I'll make my slides available here. This is my email, alina@quorumgroup.com. And thanks.
Yes, thanks, Alina. Great data. I think we have some time for questions. Any questions in the audience here? Yeah, we're got a mic coming to you right now.
Hi, thanks for the great insight. I have a question about what do you predict? You talked a little bit about the Asian market seems and stuff like that. Do you see in the future that Asian capital entering the Western market more, or because it seems like Tencent and Alibaba, they're more investing in their local content. Nexon is starting to get a little bit to the West, but do you see that sort of cross-cultural, cross-border M&As and investments happening more?
Yeah, and we saw it last year. So the top 9 of 10 were through Asian buyers. One thing that slide didn't show is Alibaba is very focused on Chinese investment. Tencent, on the other hand, is more than half in the States. So it's very interesting. They're doing Snapchat and other kinds of deals. The flexibility and kind of the desire for especially Chinese wealthy individuals to get their money out of the country through whatever needs may be is driving some of that acquisition and some of that activity. There's very wealthy families that have grown up now, and there's that kind of 25 to 35 year range where investing in games is very sexy and they want to do it. That's not talking about the corporates. So on the corporate side, their earnings are very, very high, and so they need to continue reinvesting those profits into new growth areas. So we do believe that Asia and China more specifically will fund and continue driving a lot of that M&A.
Just one additional question. Do you think that will also affect the European economy? Because I don't think there's a lot of Asian funds coming. Maybe they're going first to the US, but not so much to the European side of things. Do you see any trends there?
Yeah, I think Europe will also be enfolded into that. So Gameville, although they're not technically purchasing companies, they are moving here, and that gives them more access on the ground to be talking with great German companies. That could lead to deals. So just having presence here automatically helps them build that out. We did have a little bit more of an early penetration in the Bay Area with these Asian companies, but that leads to a lot of deals because they're on the ground.
Thank you.
Yeah, and we'll get into that a bit more in the next session when I talk about what you need to know about the Chinese market and how they invest and how they work with you as acquirers or investors. Any other questions? We've got time for one more. Yes, behind there. Wait for the mic. Thank you.
As developers in the audience, obviously we're looking at billion-dollar acquisitions, and there's some studios in here that are successful, growing, and profitable. But is there any certain metrics that both either Quorum Group or the market is looking at saying, if they're less than 10 employees and 5 million in revenue, or less than 10 million in revenue, are they a potential acquisition target, or is it not worth them wasting their time and should just continue focusing on their business?
Yeah, I think there's a few factors that would come into play when you're looking at that. Revenue as a guideline would be really great if it was just that one factor. But you do have to look at, the team, the core team. A lot of companies purchase just groups within companies because they find something fascinating about them. Some of the Oculus transactions were just for the team. It's not even clear what kind of products they were doing. They were doing consulting work. So it does really depend on, if it's revenue-based, and that's the kind of the thesis of going forward. Earnings have to be at play in that as well. If it's part of the team, it has to be a cohesive team that's been, able to create some sort of success and have been able to recreate it. Or it could be a viral hit, right? So it could be something that just takes off unexpectedly, and there's enough staying power there that it may be of interest to somebody else. So it's a very kind of hard to define question, and at the same time, the ability to ask that of somebody else really gives you that insight of, if you were looking at my company, would you be excited? Would you want to acquire it? At the end of the day, that's probably the best answer you can get directly from the source.
All right. Thanks very much, Alina.